This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Avril Hong in Singapore. The top stories this hour. Asian traders awaiting a deluge of data for clues on how quickly the Fed will continue interest rate cuts, with a delayed U.S. jobs report now due Thursday. Nvidia's earnings this week also set to be a major test for the AI trade. Bitcoin erasing its gains for the year just over a month after hitting an all-time high as risk appetite wanes. And China-Japan tensions rise over a diplomatic dispute, with Beijing issuing warnings to students and travelers.
All right, we've just opened for trade here in Australia, kicking off a new trading week. A little bit soft in the early going for the ASX, off by about 0.5% at the moment. Those two big sectors, the financials and materials sector, both weaker. Materials the worst performing right now. We're off by about 1.2%. If we take a look at Nikkei futures, they're looking pretty flat today. We've got a couple of things to watch out for in Japan today. There will be a partial reading for third quarter GDP numbers. That's not expected to make terrific reading either. We are anticipating a contraction there. We'll also be watching travel names in Japan as well. China is warning students that are studying Japan about heightened risk. This is after Prime Minister Takaichi says any Chinese use of force in Taiwan would be a survival-threatening situation. So some tension increasing between Japan and China. We'll also be looking into how the banks perform in Japan as well after they boosted their profit targets as well and announced some share buybacks. The yen's still pretty weak there at 154 at the moment, April.
Yeah, Paul, take a look at how futures are shaping up at the start of the trading week. Of course, this week is going to be about Nvidia earnings that could test the AI rally. That's already in doubt because investors have been pricing in a lower chance of a Fed rate cut for next month. At least we'll be getting the September jobs report. So says the BLS. We are seeing that risk off playing out in cryptos. Bitcoin, as we mentioned earlier, has erased its gains for the year. But also interesting how we saw a bit of a bounce on the SPX or the S&P 500 from Thursday's steep declines. This is the setup going into this week. Let's get more on what investors need to be watching. Asia Markets Executive Editor Paul Dobson joins us now, along with our tech correspondent Annabelle Jolas. Paul, let's start with you. I mean, we have the Nvidia earnings. I think that's the main focus for this week for Asia investors as well. We know it's a sell the fact event, or typically has been the case in the past couple of earnings reports. What is the consequence that you're watching out for?
Yeah, morning, April. And you're absolutely right. It matters as much for us in this region as it does for those in the US because of the big buying power that Nvidia has for the likes of Samsung, SK Hynix, TSMC, of course, as well. And that has spillover effects for the rest of the region as well. I think, as you say, Nvidia, you get me on here every 3 months. I say, big lofty expectations. How are they ever going to beat? And they still manage to beat. And the market always seems to fall afterwards all the same. You know, a bit of profit taking and people recalibrating their expectations. But longer term, it goes up again. Right now, we're in a little bit of a quandary, aren't we, when it comes to AI and valuations. The market is more worried, I think, now than it has been for some time about that narrative having a little bit of a test. So we've had about 2 weeks of ebb and flow up and down now. Without really getting any firm conviction either way. I was kind of thinking to myself about this, because we've got this big spending rollout going on, and there's nothing that's less sexy, really, than a big AI data center, right? It's a huge building with stuff like kind of just big, rows and rows and rows of servers inside it and not a lot else. So AI, I think, needs to tell a good story again soon. We need to see something impressive about what they're doing, what's being delivered, so that people can continue to be enthusiastic about this future narrative, because that's what people have been buying into all along, this technological revolution, this, new big step forwards. And so any signs that that's going on, not just in the numbers and in the earnings, but something that, people can grasp and enjoy, I think that would be a good catalyst for another leg higher.
End up with the wrong kind of exciting, Paul. But I want to get to Bell now to talk a little bit about Nvidia numbers a little bit more deeply, the market reaction aside. What are you expecting to hear in terms of CapEx and demand for some of those new chips?
Yeah, well, I think to Paul's point there, Paul Dobson, it's certainly a stock where every quarter we come in, there's very lofty expectations. Nvidia clears those and investors still end up being disappointed. But actually the results are expected to be strong yet again. So the company is set to beat Wall Street estimates on its sales, its next quarter outlook, even though you do have those concerns about the scale, the sustainability of AI spending instead. That's the view of Citi, who's also going to be looking at shipments of Blackwell, the new Rubin GPUs as well, that Citi also says are moving faster than expected. What else could be a really focal point from the earnings is certainly the impact that higher component costs are having on gross margins. But again, just in aggregate here, what we're expecting in terms of the guidance of revenue for the quarter in progress, that could be as high as nearly $66 billion. Now, at $66 billion, you've got to put it in context here. You're looking at a 56% increase on the year, but it would also be a turnover that gives Nvidia a bigger one than Ford or Bank of America. So the expectations, again, very strong going into this. And in terms of the correlation to this region, I mean, Nvidia is now just as correlated to the TAIEX as it is to the S&P 500. So certainly you can expect big moves off these earnings here.
Yeah, its earnings have tended to be a sort of macro event for the broader market. Talking about the broader market, we're seeing not just AI as a very crowded trade. There are other crowded trades that prove to be risks for markets. What are you watching?
Yeah, interesting. So right across emerging markets, it's not just the tech, but there's other places where people have leaned into and had a really wonderful year. But everybody's been jumping into the same sort of trend-following, momentum-driven kind of trades at the moment. You know, Latin American currencies have performed extremely strongly this year. For example, emerging market debt in general as well. But people are starting to question, hang on, are we all in the same trade here? What's going to happen if people start to take profit towards the end of the year? Suddenly we find that the exit isn't quite as wide as it was when we were coming in. And I think we saw that as well with the big drawdowns, for example, in the Kospi over recent weeks. You know, the down days have been quite significantly bad, and that, I think, is foreign investors trying to get out, but not enough kind of demand there to give them an easy way to offload that as well. So I think we've got to watch out for that. And I think crucial, as well as Nvidia earnings, is going to be these Fed minutes that we've got coming up as well, because so many policymakers seem to have been giving us this idea that December is far from a done deal. They weren't even really on board with the last cut, and so let's pay lots of attention to what happens there too.
Paul, talk to us about some of this price action we're seeing in Bitcoin as well, because we're back now almost to where we were at the start of the year. Of course, this is a famously volatile asset, but where do we go from here?
Yeah, Paul, as well as the crowded emerging market trades, Bitcoin has been another one of those where everybody was in it earlier on in the year. It boomed to that record high. Everybody was very excited about it. You know, the retail crowd following it ever higher, and, you know, the sort of bottom seems to have fallen out of that now. Everybody's exiting at the same time, and it's not just ETF withdrawals, but some long-term holders as well. And so those leverage plays, the people that have been borrowing in order to bet on it, are the ones that are getting hurt the most. So we erased all of the gains for the year to date. Just this morning, we are seeing a little bit of a rebound now, but again, it's having a little bit of a crisis of confidence at the moment, and that's sort of starting to sap investor demand right across broader markets as well. So again, not really sure what it will be that will stabilize it, but at some point, you know, with Bitcoin, we see these big swings and cycles where it goes up a long way, comes back down again. So it will form a bottom at some point, no doubt, and we'll have to wait and see where that is.
Bell, on top of Nvidia, we're also watching some of these Chinese EV earnings.
Yeah, that's right. There's actually a pretty strong slate coming up just between today and tomorrow. So there's Geely, there's XPeng, and there's also Xiaomi. Of course, Xiaomi being the company that was initially a smartphone player but has now made that foray, a very successful foray into EVs. But you can see here from this chart that automakers have been lifted essentially by rising EV delivery. So those are continuing to stack up quarter on quarter. You're looking at 1.2 million by the end of this year. But that should actually bode pretty well for these numbers coming into the results, because across the board, analysts are expecting, again, pretty strong third quarter numbers for these companies. In terms of what I'll be watching most closely, that's definitely going to be Xiaomi, because I think we're watching in this period, could the EV business have actually turned positive or break even? That is going to be really closely tracked. You've got the likes of UOB saying, yes, it could already be possible. Others are looking for it to turn a profit, maybe in the final 3 months of the year instead. But EVs are certainly continuing to be a bigger growth driver for that company. But We've got Geely, you've also got Xpeng coming up later today, and Xpeng as well. I mean, their quarterly revenue may have doubled, but you're seeing, again, these stocks have really risen, particularly Xpeng year to date.
All right, Asia Tech correspondent Annabelle Drewellers and Asia Markets executive editor Paul Dobson there. Well, Japan has urged China to respond appropriately after Beijing issued an advisory warning to its citizens to avoid travelling to Japan. Tensions are rising after comments on Taiwan from Japanese Prime Minister Takaichi. Let's get to our China correspondent Min Min Lo in Hong Kong now. So, Min Min, talk us through the actions that Beijing's taken so far.
Yes, Beijing has issued a travel advisory for its citizens, warning them not to go to Japan, citing safety concerns, and also saying that since the start of this year, there has been an increase in the number of crimes and attacks against Chinese citizens. It's also asking its students in Japan to monitor the situation there. Now, you can imagine the impact of this because there has been about close to 7.5 million Chinese visitors to Japan so far in the first 9 months of this year. They make up nearly a quarter of Japan's total foreign visitors. So the amount of travel spending that Japan will lose out on, I guess China is hoping that this would put pressure on Japan to retract its words so far, because Takaichi had mentioned that any military attack on Taiwan could be construed as an existential crisis for Japan. And the reason this is significant is because Japanese constitution has renounced the use of force, but there is a leeway given for any situation that is survival threatening for Japan. So this is a legal justification for Japan in some ways to intervene militarily. And China is taking it as such. A People's Daily editorial has said that this is the first overt threat of force that Japan has made to China in 80 years since its defeat in the Japanese in the war in 1945.
Yeah, and this latest flare-up, Min Min, couldn't come at a worse time, as we see in this chart how these arrivals from China to Japan have reached pre-pandemic peaks. But what is your sense of whether these latest moves signal more countermeasures from both sides to come?
Yes, well, Japan has been urging China to temper its response, saying that this is not in line with what the two leaders agreed on when it comes to advancing the strategic relations between the two sides. But we could be headed for a period of an extended period of tension here, because over the weekend, China had sent 4 armed coast guards to the disputed waters near Japan that is controlled by Japan, the so-called Diaoyu or Senkaku Islands that both sides have disagreements on. And China has said that was a right enforcement patrol that was legal. And China has repeatedly said it wants Japan to retract those words, but so far we hadn't had an explicit retraction from Japan yet, even though the Japanese policy chief has been urging for calm, saying that Japan's stance hasn't really changed and that dialogue is needed. So we could see, I mean, this was also signaled on Weibo, on Yueyuan Tantian, which is an account that is affiliated with state media CCTV, saying that these are signals that China is prepared to take more countermeasures.
Min Min, thank you so much. Bloomberg's China correspondent Min Min Lo. We have more ahead on the Asia trade. This is Bloomberg. We have plenty of economic data on the docket this week, starting today with Japan's industrial production and GDP figures. On Wednesday, the Fed will release minutes from its October meeting, shedding light on an unusual split among policymakers after the FOMC cut rates by a quarter point. We are seeing the Bloomberg Dollar Index looking pretty flat, the yen still hovering quite weak against the greenback. Of course, we also have the BLS saying that it'll release the September jobs report on Thursday. And this was, of course, delayed due to the government shutdown. Now, our next guest is approaching the end of 2025 and the year ahead with far more caution than before. Joining us now is Trinh, emerging markets Asia economist at Natixis. Trinh, really good to see you. First off, why this trepidation going into next year? And in particular, how are EM Asia economies coping?
We are starting this year with much more caution just because 2025, despite the bark of tariffs, has been quite great for EM Asia. Exports were pretty strong thanks to front loading, thanks to the ICT cycle upturn, and of course the big deployment of AI to help the big chippers. And that has helped mitigated a lot of the drag. And more importantly, Asia central banks had plenty of room, given the soft dollar, to cut rates. So we're looking into 2026 with much more trepidation because a lot of this is running out of steam. We're looking at almost the end of the cutting cycle for a lot of emerging Asian economies in rate cut. There's very limited room for that. But at the same time, the exports are slowing, right? Demand is decelerating in China very rapidly. In the U.S., demand is likely decelerating also very rapidly. So as a result, we're very cautious on the exports for the next year, exports outlook for the next year, especially for Asian big traders and those more exposed to the chip cycle that have performed extremely well this year.
Trinh, we've been seeing in the past 2 months or so lots of central bank surprises, increasingly hard to predict what policymakers are going to do. I wonder, though, going into next year, the risk, should we be talking not just about rate cuts or holds, but about rate hikes, given the inflation trajectory?
Absolutely. So one of the big concerns when the China data came out in October really is what is the policy reaction function, given the fact that data has been very underwhelming. And despite the fact that China has really high real GDP growth, nominal GDP has been very underwhelming, meaning real debt has risen for households, for corporates, so they find it easier to pay down debt. So the move forward obviously is cutting rates, but it's not so obvious as the dollar is quite uncertain where the direction that will lead. So for Asian central banks, we're reaching at the end of the traditional monetary support. So we have to look into fiscal support. So when we are looking at into 2026, where a monetary tap is running dry and fiscal policy is getting much more loose, there's a big question that who is going to absorb a lot of this debt. Obviously, fiscal policy is supportive for growth, especially for the pro-growth agenda. And we're looking at South Korea, China, Japan, Indonesia, many countries easing fiscal policy. So that's a big concern. But fundamentally, we're not as concerned about inflation just yet, given given the fact that we fundamentally think the output gap is quite a negative in Asia across the board still. So domestic demand is the weak link of the equation for Asian growth. Exports have been strong, so turning into next year, fiscal policy we need to support. And oil is an important equation, and food prices as well. Because oil we expect to be quite subdued and food has been favorable. So the risk factor is that those factors will rise. We don't think that is the case. So meaning inflation will remain manageable, but we don't have a lot of space as we've already front-loaded a lot of these policy supports.
Yeah, Trinh, we've got a case study today. In fact, you mentioned Indonesia there. I mean, there is a case in Indonesia for a cut, but to what degree? To your point, is inflation standing in the way here? And if you do see fiscal stimulus in Indonesia, that sounds like it's hardly going to help the problem.
Absolutely. They've cut the most in Asia, 150 basis points of cut. Really surprised markets when they've been very dovish in front-loading that cut to pause. But the reason for the pause is very clear, is that the gap between the Fed and Indonesia is really very, very narrow. If they were to cut this week, that gap would narrow from 75 basis points to 50. And the market is uncertain where December is going to be for the Fed, right? Will it cut the upper bound from 4% to 3.75 in December? Given that is so uncertain, a lot of central banks are not going to take that risk, particularly when their nominal policy rates are so low. And inflationary pressures are actually rising marginally for Indonesia. So real rates are actually getting worse. Some other central banks have much more space, like India, for example. Inflation has been very, very low. They have a lot of space. But given uncertainty, again, this elusive India trade deal putting a lot of pressure on the rupee, the central bank also is not really the one that with a lot of space to cut are not not really cutting. So therefore, this caution is going to continue until we get clarity on where the growth outlook for the U.S. is. If the growth outlook is very, very decent, and at the same time we have a soft enough for the central bank to cut and inflation is benign, then maybe we can have a much more optimistic outlook for 2026. For now, given the fact that we have the export cycle turning down and growth picture very weak, and big question, of course, is China reflation trade, right? Will China do enough fiscal to really reflate its economy, import more from the rest of Asia versus this year where imports have been quite weak?
Trinh, we've only got about 30 seconds remaining, but I do just want to quickly get your views on the risk posed to some Asian economies from potential correction in AI stocks, just very quickly.
So if you look at Korea, what the best stock market in Asia, not talked about much, is really chips have done really well. Autos have been very much down. With the trade deal, with the lower of tariffs, I think autos will do next year much better. But the question is, will chips continue? And the cyclical factor is fading, given the cycle turning into year. So we may still have very strong first quarter, but I think the risks are really there that chips that have driven a lot of this exceptional growth in Asia, it's going to decelerate. So we looking at 2026 with cyclical factors, risk rising, and at the same time, fundamental growth is looking very saggy globally. So the big question is, how big are we going to get regarding the fiscal bazooka into 2026 to offset the external stress that we're going to face?
All right, Trinh Nguyen, emerging markets Asia economist at Natixis. Thanks, as always, for joining us. We have more ahead on the Asia trade. This is Bloomberg.
The top global headlines we're following. India has arrested a Kashmiri man accusing him of helping plan last week's suicide bombing in New Delhi that killed 10 and injured 32. Authorities say he helped buy the car used in the attack. Indian investigators say they're still working to uncover the wider network behind the bombing, which has raised security tensions for the Modi government. German Finance Minister Lars Klingbeil is heading to Asia, pushing for open, rules-based trade as tensions rise between the US, China, and Europe. He'll take part in the German-Chinese financial dialogue in Beijing, meet officials in Shanghai and Singapore, and press for fair competition along with better market access for German firms. Thailand says tariff talks with the U.S. will continue separately from its commitments to President Trump over the border dispute with Cambodia. Bangkok clarified the stance after Prime Minister Anutin spoke with Trump, who signaled the U.S. doesn't wish to interfere in the conflict. The U.S. had paused trade talks pending Thai compliance with a peace deal. Paul?
Let's take a look at how shares of the world's biggest miner are tracking. BHP currently down about 1.5% in the early going here in Australia. That is lagging the broader index. Now, this is after a London judge ruled that BHP is liable to compensate about 620,000 Brazilians after the 2015 Samarco dam collapse in Brazil. The damages being sought £36 billion. That's about $47.4 billion. The court saying the risk of the collapse of the dam was foreseeable. The court says BHP were negligent, imprudent, and lacking in skill. Now, BHP says it does plan to appeal that ruling, which was handed down on Friday after the close here in Australia. It confirms that ruling and says it's going to update existing provisions to reflect the claim, but will be appealing. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at how US futures are tracking at the moment. S&P futures ticking a little bit higher, and markets did recover in the US on Friday. Major catalyst this week, though, the Nvidia earnings. There's always lofty expectations here, and there's quite often a sell the fact event as well. We do have the S&P 500 back above its 50-day moving average. The key question is whether or not it's going to be able to stay there. Let's get to this story now. The US Justice Department announcing an investigation into Jeffrey Epstein's ties to prominent Democrats, and this is after being urged to do so by President Trump. Now, that's after new emails raised questions about the president's own relationship with the disgraced financier. Let's get to Bloomberg editor Tony Chuchka now in Washington. So, Tony, a number of people on the list for this investigation. Can't help but notice that there's one name missing. Can you tell us more?
Yeah, well, Jeffrey Epstein was the talk of the town, as they say, last week. It ended with Trump asking the Justice Department to undertake this investigation that came, as you say, as you pointed out, after the release of these emails that do put Trump in a sort of in a spotlight that he would much rather obviously not be in. And some of the names that came up here, Bill Clinton, Larry Summers, the former Treasury Secretary, and also JPMorgan Chase. And Trump basically asked Attorney General Pam Bondi to open an investigation into what the connections are there, and she went ahead and said that that will be launched.
Tony, we're also watching Trump and the tariff policy against a backdrop. Treasury Secretary Scott Bessent has also been weighing in on the inflation trajectory. Take a listen.
I would expect in the first 2 quarters, we are going to see the inflation curve bend down and the real income curve substantially accelerate. And when those 2 lines cross, Americans are going to feel it.
Perhaps as part of efforts to ease food prices, we saw the lowering of tariffs on some products from last week. Where are we on all this?
It's all about affordability, quote unquote, now, and that took off with, as you recall, with the U.S. election day earlier this month, where Democrats in 2 states won the governorships and also carried the day on a variety of other issues, basically on the notion that Trump has failed to get prices under control, and that's what Bessent is referring to. Another issue that he mentioned that's been in play is, which then connects to Trump's whole tariff policy, is that Trump has been talking about a $2,000 rebate possibly next year, or dividend, as he calls it, for most Americans. Based on this tariff revenue that's coming in. There's been some debate about this and how it could work, and Bessent is the most recent administration official to point out that this would require congressional approval. I mean, it would be similar to the stimulus checks that went out under Joe Biden during the COVID pandemic. But all of it ties together under this affordability heading, and that Republicans are feeling, and Trump are feeling some heat there as we head into 2026, which is a midterm election here in the United States.
Tony, thanks so much for running us through these nuances. Our Bloomberg editor, Tony Chuchka. We turn to Chile, where presidential elections have just closed. Candidates from either end of extreme political ideologies, Jose Antonio Kast and Janet Jara, are on track to advance to runoff elections. Let's cross to Santiago, and our Latin America executive editor, Creighton Harrison, is there for us. So it looks like we're headed for runoff. I mean, put things in perspective for us.
Sure. Yeah, this was actually the most expected outcome. The polls have been a little back and forth down to the very end of public polling, but these two were always the favorites. In part, on the left, you had Janet Jara, who won a primary among leftist candidates. So she was always going to get a certain percentage of the vote since the left kind of consolidated behind her. The question was always going to be what happened with the right. And Jose Antonio Kast is, sort of a right-wing figure. This is his third run for president, and he's known as, sort of a conservative Christian, which in the past hasn't gotten him quite over the threshold with voters, but he's kind of taken hold this time with a message about closing the borders and keeping immigrants out, which may sound familiar from other elections around the country, but it has taken hold here in Chile, where there has been a big surge of migration, most prominently from Venezuela, and a lot of people are concerned about how that is reshaping the country. So that appears to have been a key factor here. And it's fair to say that the right outperformed expectations with the vote across the board. There were several right-wing candidates who did very well, just not as well as Kast, and Jara on the left underperformed how she'd been polling. So markets are likely to respond pretty favorably to that tomorrow.
So, Creighton, when will the runoff happen, and what's the likely outcome here? What issues are going to be on the ballot?
So December 14th is the runoff, and migration far and away has been the number one issue for voters. They, again, are experiencing a surge unlike what Chile's ever experienced in the past. This country has traditionally been very welcoming of newcomers, but over time there have been some increases in crime that people are choosing to associate with migrants, and so this has become more front and center for them. Crime in general is sort of something that Chileans hold very highly as a key issue for them, even though if you compare Chile against other countries in Latin America, it's still a very low rate of crime. But that's why the message of a hard right, tough on crime, tough on migration candidate seems to be resonating this time around.
All right, Latin America Executive Editor Creighton Harrison there in Santiago. Well, the leader of Andra Pradesh, one of India's key southern states, known for its thriving tech hubs, is confident that New Delhi and Washington will soon strike a trade deal. In Chandrababu Naidu, who's positioned his state as a major destination for investment and innovation, spoke with us about the ongoing trade talks and why he remains unconcerned about US restrictions on H-1B skilled visas for Indian workers.
These are all always challenges, opportunities. When you don't have any production, no need to depend on global community. Today we are producing shrimp, aqua. National exports 60% are from Andra Pradesh, 60-65%, 2/3 are from Andra Pradesh. Naturally we will have this type of problems. One is alternative markets. With my strength, I have to move forward. And also they are negotiating Government of India. They may sort it out.
Do you expect a deal soon?
Very soon I'm expecting something.
There's a lot of students here too who are engineers and they get H-1B visas into the US. Those are now being restricted. How do you cope with that?
No, what I'm saying, in knowledge economy, location is not important. Knowledge is important, leadership is important. I can start a company here to service Americans, cost-effective way, in a service sector. There are manufacturing, I have to go there. There are some sectors where physical presence is important, then they have to move. Otherwise, so many services you can provide online by having proper knowledge and leadership quality. That is going to happen. If all intelligent people are going to America. Because of that, they are doing the best. Now some people are returned in India. That will help us further.
That was Chandrababu Naidu, Chief Minister of Andhra Pradesh, speaking with Bloomberg Asia Economics and Government Executive Editor Daniel Tenkate. We have more ahead on the Asia trade. This is Bloomberg.
let's take a look at how Japan assets are tracking at the moment ahead of the open in Japan. We got futures looking a little bit softer, off by about 1/5% there. The yen still fairly weak. We are going to get, of course, GDP data for the third quarter, partial reading out later. It is expected to show a contraction, so we will be watching very closely for any news of fiscal stimulus coming from the Takaichi government. Well, once known primarily for its photography business, Fujifilm is expanding into biotechnology and semiconductors with major products in India and other countries. Speaking exclusively to Bloomberg, CEO Teiichi Goto told us more about the company's expansion plans and the impact of tariffs.
Currently, the primary areas we're investing in are, first, contract manufacturing for the biopharmaceutical business, also known as CDMO. The other area is semiconductor materials. These two markets have exceptionally strong growth potential. For example, the CDMO business currently represents a $500 billion market size. While low molecular weight drugs are currently dominant, the market is expected to grow to the point where biopharmaceuticals will surpass them by 2028. As for the semiconductor market, it has been growing at an annual rate of around 8% or 9%. By 2030, it is projected to reach a scale of around $1 trillion. We are investing in both of these areas.
When it comes to the semiconductor materials business, of course, you have the resist and the front end part of the manufacturing that you're dealing with, but you've also talked about strengthening the back end processes materials, right? Tell us a little bit about that drive and what you're focusing on right now.
One point is that our company possesses various materials for different processes within semiconductor manufacturing. That allows us to provide a one-stop solution. That's one of our key points. Right now, within that, the area we're focusing on the most is CMP slurries. First, as semiconductors advance in cutting-edge logic, memory, and packaging technologies, miniaturization and stacking continue to progress. Naturally, this also increases the volume of slurries required. Now, regarding the back-end process part of your question, the back-end process today involves bonding two layers together. The bonding technology itself is incredibly difficult. It offers many benefits, like lower power consumption. The most critical factor during bonding is the slurry used for polishing that area. We've now developed a slurry for that most critical part called hybrid bonding. It's been adopted by major semiconductor manufacturers, and we're currently at the stage where business opportunities are opening up. In other back-end processes, we're also working on things like insulating polyamide. So how much of that back-end market we can capture is now one of our major goals and challenges. It's
really interesting to see these Japanese companies really focused on the semiconductor equipment and materials part of the whole global chip ecosystem, right? How important do you think that is for Japan as a whole in order to be able to be part of this broader global drive for artificial intelligence?
We are a materials manufacturer. From a materials perspective, the key point remains providing materials that enable further miniaturization and higher density. Currently, Japanese companies are at the world's top level in this materials field. We are actually working together with semiconductor equipment manufacturers to develop these materials.
And you're expanding also overseas. We heard about a potential factory of semiconductor materials in India. How's that coming along?
Recently, Indian Prime Minister Modi visited, and I attended that meeting. As he also mentioned, semiconductors represent a significant business opportunity for India, both economically and strategically. We will cooperate in establishing production facilities. This is also to build a domestic supply chain within India for materials. As I mentioned earlier, we offer a one-stop solution and end-to-end support. So from resist to processed chemicals, slurries, and more, we are committed to helping establish this, and the decision to build a factory in India is already finalized. We are now working diligently to plan and advance this initiative, collaborating with local chemical material manufacturers to source materials, develop them into products, and supply them to Indian semiconductor manufacturers.
How big do you think is the potential of India for Fujifilm?
It's still a bit unclear, but China's population is declining, and the question is how much its economy will grow from here. India is seen globally as the next major market to grow. The Indian market itself is a huge market, but looking beyond that to Africa, the Middle East, and the surrounding country of East Asia, I think India will become a production hub. From there, exporting the products to surrounding countries will inevitably expand the market share for that type of semiconductor.
Looking at the broader Fujifilm business, what's been the impact so far, especially given that we're not just talking about levies, we're also talking about potentially costs going up when it comes to some of the materials that need to go into a lot of the components of the things that you make?
That's certainly true. The tariff issue was indeed a major problem for us initially, but now at an incredible speed, we've changed the supply chain. We ship from the country of origin that supports us. Then we also worked on cost reduction, cutting expenses, and lowering product costs. Additionally, we introduced new high-value added products. As a result, the impact of tariffs has been minimized.
Fujifilm CEO Teiichi Goto speaking to Bloomberg Sharian in Tokyo. Now, Japan's three biggest banks will also be in focus at the Open after reporting earnings on Friday. MUFG, Sumitomo and Mizuho all raised their annual earnings targets to fresh records and announced plans to buy back shares. Let's cross to Tokyo with our finance editor, Russell Ward. So, Russell, it looks like the lenders seem a little less worried about headwinds. What were your takeaways from the results?
That's right, Avril. Go back 6 months when the banks announced their year-ahead forecasts. They were concerned about downside risks, particularly from the trade war. But those risks have subsided in recent months. The bank CEOs, when they're reporting the results on Friday, all spoke of really solid corporate activity here in Japan. Companies are out there borrowing money, they're spending, they're preparing to and looking at doing mergers, and banks can facilitate all of that. And so that's been a real tailwind for the banks. Also, of course, against the backdrop of higher interest rates here in Japan, that's also been boosting the lending income. And also they've been booking healthy gains from sales of their cross-shareholdings at a time when, the Topix Index, Japanese shares are trading at a record. So all of these tailwinds have come together, and the banks have all raised their profit forecasts. Even Mizuho, it's the second time this fiscal year that they've raised their profit forecast. So we'll just have to see how the market interprets that, particularly in the light of the buybacks that they also announced.
So the planets certainly seem aligned for Japan's banks at the moment, but what are the risks going forward?
Yeah, I think there's still lingering risks from the trade war. The bank's CEOs did speak about things like, the impact on inflation in the US, and there's also, the concerns about potential AI bubble as well. But I think some of the risks are more on the domestic front. Under the new Prime Minister Sanae Takaichi, she is a proponent of looser fiscal and monetary policy. So if she does have an influence on BOJ policy, for example, that would mean slower and maybe fewer rate hikes, which would be bad for the bank's lending profitability. And then also if her reins on the government's finances became a bit more lax, that could reduce the debt profile of Japan, which is never good for the banking sector either. So the banks will be looking closely to see how her policies unfold.
Russell, thank you so much. Finance editor Russell Ward in Tokyo for us there. We also have breaking data out of Japan. These are for third quarter preliminary GDP numbers on a seasonally adjusted on-quarter basis. The decline not as bad as expected, contraction of 0.4% versus the consensus estimate of 0.6%, and the prior reading has been revised upwards a touch. We also have on the annualized seasonally adjusted on-quarter basis at 1.8% of contraction versus survey estimates for 2.4%. And of course, there had been some suggestion that a bad GDP number could give the new Prime Minister fresh grounds to urge caution on BOJ rate hikes. That is something to consider, along with whether this in any way affects calls for bigger fiscal spending. And of course, we also have industrial production numbers out later today. Seeing the yen looking unchanged against the greenback for the moment. Catch Japan Ahead every Monday at 8:40 a.m. If you're watching in Tokyo, subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
Let's get the latest from the corporate front. A McKinsey review has reportedly criticised ANZ's culture, saying staff avoided delivering bad news. The AFR says the review also found that former CEO Shane Elliott did not sufficiently focus on customers and non-financial risk. ANZ hired the consulting firm to conduct a wide-ranging review after Australia's banking regulator found shortcomings and imposed higher capital requirements. Boeing says it will focus on stabilising 737 production at 42 planes a month before increasing output again next year. The company is still recovering from years of setbacks and working towards the certification of the smallest and largest 737 variants. Boeing says getting it right at pace is better than going fast as it ramps up both the 737 and 787 lines. Avril.
Paul, here are some of the stocks to watch when trade opens in Korea and Japan shortly. Keeping tabs on Tesla suppliers after the Wall Street Journal reported that the EV maker is now requiring its suppliers to exclude China-made components in the manufacturing of its cars in the U.S. Also tracking crypto names in the region as Bitcoin erases this year's gains. The crypto bear market is deepening as risk appetite drops just a little more than a month since reaching an all-time high on the cryptocurrency. So the likes of Neva in Korea and Bitcoin treasury firm Metaplanet in Japan will be among the names to watch. Of course, watching travel and tourism stocks as well. Those may dip after China advised citizens to avoid trips to Japan. We are seeing this ongoing diplomatic spat between the two countries. We'll keep an eye on the markets open next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. And of course, Paul, big week. We got Nvidia earnings, Fed minutes, and then BLS going to give us the September jobs report. But ahead of that, we had data from Japan, the third quarter GDP numbers at a time when there's a spat diplomatically going on between China and Japan.
Yeah, that's right. China warning students studying in Japan as tensions rise between the two countries. But that GDP data was interesting, Avril, coming in a little bit better than anticipated. So we'll wait and see what that means for implications around fiscal stimulus and, of course, the BOJ's tightening path as well.
Absolutely. And this is, of course, coming off Friday, where we already got some of these bank earnings from the largest lenders in the country, and not just the rates trajectory for the Bank of Japan, but how they've raised guidance. They've announced share buybacks as well. So the banks are among those to watch in the session today. We're also watching the travel, tourism-related stocks, consumption-related names. Think about the cosmetics names in Japan as well. well as we watch the open. We are seeing it a bit softer for now, but don't forget as well the handover that we did get from Wall Street on Friday. We are seeing that relative weakness on the yen still nudging towards that 155 handle against the greenback, and that selling on the 10-year in Japan hovering at 1.71 on the yield on the 10-year. Let's take a quick look at how South Korean stocks are faring. Of course, last Friday we saw that steep decline, which was its worst since early August of about 4%. So you're seeing that bounce back for the moment. We have Reuters reporting that Samsung has hiked prices for some of its memory products. So does this feed into the narrative that there is enough AI demand, they can be price setters? This is what we're seeing at the open for the moment, Paul.
Yeah, always a fun time when we get these Nvidia results to watch that battle between reality versus expectations. We did see US markets recover on Friday. We got the S&P back above its 50-day moving average. But yeah, those Nvidia results will be a key test of that this week. We've got US debt trading as well in Japan now. We're just seeing yields ticking up on the 10-year just ever so slightly. Of course, we do have a Fed decision coming up in early December against a backdrop of an absolute paucity of data. I mean, there is a wave of data coming, but it's going to take time to normalize the flow of information. So we might see a little bit of volatility in the bond market in the coming weeks. But we have heard from a couple of Fed speakers. Not shedding a lot of light, though. Let's have a listen to what they had to say.
I've been able to get behind the last two cuts. And we'll see what happens for this next one. I still got a couple of weeks, right? So I don't. One thing I try to remind everyone, like, we are a data-driven body, right? So I want the information to guide where I think the appropriate policy should be.
I think it would be hard to support another rate cut unless we were to get convincing evidence that inflation is really coming down faster than my expectations, or that we were seeing more than the gradual cooling that we've been seeing in the labor market.
Our next guest says he likes the tech and AI infrastructure CapEx theme for investing. Joining us now is Kieran Calder, Head of Asia Equity Research at UBP. Good to see you, Kieran.
Morning.
So do you think Nvidia is going to give us enough music for a good mood resumption, the party to continue going in the AI narrative?
Well, it's a good question, and I think it goes back to the biggest question that the market's been focusing on is, are we in a bubble, an AI bubble? So we think at the moment we're not. We think that while valuations are elevated, it's supported by earnings growth amongst the largest players, and it's still the CapEx investment theme rather than services around AI. But it leads to three risks, we think, the biggest risks are. So one is earnings. So obviously the next signpost for that is Nvidia earnings on later this week. They'll need to beat, we think. So at elevated valuations, you're much more susceptible to downside if you miss on earnings. Secondly, we think that so the second risk we think there is that a lot of the hyperscalers are now raising debt to fund their investment as well. So this widens the circle of risk in case anything goes wrong. So that's a risk, we think. And then the third risk, we think, is OpenAI, which is at the center of all of this, and we think really looks too big to fail on the AI investment theme.
So optimistic, but we're keeping our eyes open as we head into this. But I wanted your thoughts. I mean, when it comes to the hyperscalers, when do you think it flips from, okay, when you look at their earnings, it's okay as long as CapEx is humming along? What about the monetization side of things?
This is the big question. So what will monetization look like? Will it look like productivity gains? Will there be extra, revenue? OpenAI itself earns only millions, a couple $1 billion of revenue, 13, I think. But it's not the amount that we're seeing in terms of investment. This is the big question. It's obvious that AI looks like a good tool, especially around productivity, and this is where we're going to need to see some evidence over the next, into early 2026.
A lot of the people that we've spoken to suggest that, kind of as a hedge to valuation risks, another way to play AI would be via energy or utilities. How are you viewing the opportunities in that space?
Yeah, so the two sectors that we like are U.S. tech and global utilities. The bottleneck in AI investment and running these massive data centers is energy. So if you talk to any of the regulated utilities, private producers, they cannot keep up with demand. So we also like that as a theme, as a corollary of the data center theme.
Kieran, so you say AI is not in a bubble. You seem reasonably optimistic about US markets as well, but you still like gold also. Can you square that circle for us? Where do you see the risk?
Well, it's also, hedging risk of the being overweight. U.S. tech is part of it, and also this is from our perspective as a private bank within a global balanced portfolio. We have a elevated recommendation in terms of weighting in gold, and that's partly to offset the risk of also being long, U.S. tech.
And, of course, the backdrop to gold as well is whatever happens with the Fed's next move. And, do you want to toss a coin for us live on air? We really are in that territory. Where do you see this heading in December?
Well, I'm going to say that there's going to be a cut before the end of January, which is not really answering your question. But we think, the clip you were playing earlier, obviously there's been there's been no data. So the Fed really needs to see a bit of the data around, especially jobs, which may be good according to ADP, may be bad according to sentiment, and inflation. So we think that if you look at the futures, it is a coin flip. It's 50% that we'll get a cut next month or not. We think definitely we're heading to a more accommodative stance from the Fed, and certainly by May next year, once we have a new chair, it's going to be pretty clear. Might
that then shape the value versus tech dichotomy in the region, you think?
So you're talking about once rates are much lower, value may outperform because we want to pursue better outlook in earnings and stuff.
Couple of months.
Yeah, I think that at some point you want to balance the growth aspect with the value aspect of exposure to equities. We think that far and away, and certainly since this year, since Liberation Day, growth is the only theme that's outperformed in S&P, for example, whereas all the value, dividend has all massively underperformed. So there'd definitely be an opportunity to flip if we do get growth start to lag or not meet expectations, and so we'd have to be ready for that for sure.
And what are your thoughts on China? How long do you think markets there can continue running along a bit divorced from fundamentals of the economy?
Yeah, I think you have to look at the sort of two parts of China. So there's the old part of China, which is still dragged down by real estate, which is a huge problem still, which is starting to be at least acknowledged, but not really addressed yet. And that's dragging down, for example, the banking sector, insurance sector. It's all exposed to this. And so that's the part that the legacy China versus the new China, so the tech platforms, EV names, for example, or at least some of them, which we think is still strong. So for us, the exposure that we want to have to China is based on the new China aspect, and we prefer to be underweight the old China aspect for now, at least. And overall, it brings us to a neutral weighting on China. We think the upside for China is if we get a big trade deal with the U.S., and I think that maybe President Xi doesn't really care so much, but I think President Trump would really like to see something like that and is really pushing for that.
I'm glad you raised the geopolitical backdrop, though, because we're also seeing this flare-up between China and Japan, a diplomatic spat. How closely are you watching that as a risk for markets, maybe on the margins, particular sectors that might be affected?
Yeah, I think over the long term, these things don't matter. We tend to see every 6 months or so, Chinese will stop buying Toyotas, or there'll be some protests, and it's all, of course, encouraged and possibly orchestrated by the party. So, you mentioned earlier, they're talking that China is warning its students and maybe against travel in Japan. I think it's a blip, and we need to look more at the actual economic situation.
All right, Kieran Calder, Head of Equity Research for Asia at UBP. Thanks so much for joining us. Let's take a look at a few movers in the region at the moment. I want to check in on Japan banks because we have heard most of the big banks raising their earnings to fresh record highs, also announcing plans to buy back shares. And this says, of course, as the tightening narrative takes hold in Japan, it's really boosting the profitability of lending as well, and trade fears subsiding as well. So all the banks catching a tailwind at the moment. Mitsubishi UFJ flat, but look at Sumitomo Mitsui, better by more than 4.8% at the moment. On the other side of the coin, the Bitcoin, that is, let's take a look at how crypto stocks are performing. A lot of softness here, and we've seen Bitcoin moving back to where it was pretty much at the start of the year. All that enthusiasm following President Trump's victory appears to have evaporated. We've got a lot of crypto tokens off about 30%. General risk-off sentiment taking hold, and crypto appears to be the canary in the coal mine for that, and selling off at the moment. So we're seeing some of these crypto-related stocks sinking in line with that. We're more ahead on the Asia trade. This is Bloomberg. Let's take a look at how Japan travel stocks are doing. Not great is the short answer. Part of the reason for this is the tension that we're seeing escalating between China and Japan at the moment. China warning its citizens against traveling to Japan. And this is after Sanae Takaichi weighed in on the idea of China using force in Taiwan. The Prime Minister describing that as a survival-threatening situation. That sentiment didn't go down well in China, as you might expect. And we're seeing travel stocks suffering as a result. Well, let's get to our China correspondent Min Min Lo in Hong Kong now for more on this. So Min Min, tell us about the actions that Beijing's taken so far.
Yes, Beijing has told its students in Japan, as well as those planning to travel there, to take note of the security situation. It issued a travel advisory essentially telling Chinese people to avoid going to Japan. And this will have a huge impact on Japan, given that nearly a quarter of its foreign foreign travelers are Chinese. And here you can see the travel advisory from the Chinese Foreign Ministry saying that there has been an increase in attacks and crimes against Chinese citizens to consider as well. And you think about the impact that this would have on some of the Japanese retailers as well. Companies like Don Quixote, Fast Retailing, Shiseido, for example. Some of these rely heavily on Chinese travel spending because Chinese travelers tend to spend a lot more. Their Chinese expansion could also be hampered should this escalate further, and if China does get its citizens to boycott some of these brands. And Japan has already come out to urge China to calm down and to temper its response, saying that this is not in line with what the two leaders had agreed on when they talked about advancing their mutually beneficial relationship.
Min Min, do we have any inclination or sense of whether tensions are going to be ramped up further?
Well, it doesn't seem like it would die down anytime soon, because over the weekend we had seen further escalation as China sent 4 armed coast guards to the disputed waters near Japan's Senkaku Islands and what China calls the Diaoyu Islands. Both sides are claiming that the area belongs to them. And China says that that was a rights enforcing patrol that is illegal. At the same time, we had seen a slew of commentaries across Chinese state media urging Japan to retract those statements or face powerful consequences. And China's People's Daily, for instance, is saying that this is the first overt threat of force from Japan since 1945, when Japan basically lost the war after the invasion in China. And Xinhua as well, saying that this is outright militaristic adventurism, a reckless gambit by Japan. So yes, it doesn't seem like it will die down anytime soon. It seems like these are early signals that China is prepared to continue placing pressure on Japan until they retract their statements.
Min, thank you so much for running us through the stance from China. Our Bloomberg China correspondent, Min Lo. Now, Bloomberg's economy and government reporter Paul Jackson joins us now. Paul, I wonder if we've been hearing any other reaction from Tokyo, and what has the perceived impact been for the economy in Japan, given the potential hit to tourism?
Well, I think the impact on the economy is something that we'll be looking at over the coming weeks and months. As Min said, at this point, the call for tourists to shy away from visiting Japan, that could have quite an impact. They are the largest spending tourists that visit to Japan, and while the numbers haven't recovered from what we saw before the pandemic, they're still an important source of spending by inbound tourists. Min's mentioned some of the companies that could be affected by slower sales from those tourists. We've also got this advisory for students to rethink whether they want to be studying in Japan. I think around about a third of foreign students in Japan are from China, so that could affect the finances of those institutions. I think we're still waiting to see whether this Spat expands to something that hits the wider economy in the sense of exports, like we saw after the nationalization of those islands that Min mentioned, the Senkaku Diaoyu. At that time, we saw a boycotting of Japanese products in China. So then we saw a clear fall in exports to the country. Of course, then it's going to feed into investment plans. So the scope for a wider hit to the economy is there, but we're not quite at that stage yet.
Paul, let's talk about those third quarter GDP numbers as well. I mean, Japan's economy contracting for the first time in 6 quarters, although not by as much as expected. What are the implications here for potential fiscal stimulus?
I mean, as you mentioned, I mean, the fall was expected. We knew there was going to be a pullback from exports over the summer because we had the bringing forward of exports in the previous quarters. Companies tried to beat the tariffs of Donald Trump, so that part was expected. We also knew there was going to be a sharp drop-off in spending on housing. It's actually a third fall in the amount spent on the property market. Reflecting environmental changes, regulations that came in. So there was, again, a flood of spending before the spring, and then that's tailed off. Now, the fall ended up being a bit smaller, still 1.8% drop, so it's not good. But we're expecting a 2.4% drop. That's mainly down to much stronger figures on the capital spending side. So it shows continuing confidence amongst companies in investment. But still, I think the bigger picture is that consumer spending was almost flat. We do not have the strength in household spending to prop up the economy if other things go wrong. So then that feeds in to an economic package for the Prime Minister, Takaichi. She's going to probably be announcing that towards the end of this week. And we're already expecting spending to be ramped up from last year's package, which cost about 13.9 trillion yen. We're seeing reports that this year it's going to be close to 17 trillion, with subsidies for households on electricity and gas likely to be doubled, is the latest we're hearing.
All right, economy and government editor Paul Jackson there in Tokyo. More ahead on the Asia trade. This is Bloomberg.
Now, Now, amid the diplomatic spat between China and Japan, we're already seeing market reaction in terms of the travel, tourism, consumption-related stocks. Japan Shiseido shares dropping 11% after China warns on visits to Japan. We're also seeing the likes of Isetan Mitsukoshi falling as much as 12%. This is the most since April 7. So steep declines you're seeing on some of these Japanese stocks, which, considering the timing of this, perhaps affects how Japan could actually capitalize on the weakness of the yen in a driver for tourism, as we see GDP numbers, of course, for the third quarter, that contraction that was as expected. But Paul, also watching assets in Korea.
Yeah, absolutely, particularly against the backdrop of Nvidia earnings coming out later this week, because, whether or not you think it's a bubble, there are certainly signs of fatigue in some sections of the market. So we've got the Kospi at 4048. So if you want to take a look at the technical analysis, it did fail to hold above the 4,200 level in November, and now looks as if it's flirting with a double top formation. If we see the Kospi breaking below 3950, there could be room for further slides as these, let's call them concerns around the strength of the AI complex in the short term continue to get raised. On the flip side, however, we are hearing Korean conglomerates are going to be pledging more than $500 million in domestic investments in Korea. Samsung Group, SK Group are among the companies pledging to make these investments, and this comes after the trade deal with the US raised concerns about low domestic investment as well as the level of the won. So we've got Samsung and its affiliates planning to invest more than $300 billion in the country, including in AI infrastructure and research and development as well. SK Group reiterating its plans to invest about 128 trillion won in AI chips, energy and biotech through to 2028. Also Hyundai, LG Group also reaffirming plans for more investment in Korea's economy. Avril.
Yeah, speaking of investment pledges and tariffs, take a look at Europe assets, because there is the lingering concern about how the tariff woes may cut the EU's growth forecast for next year. And this is despite the US set to lower tariffs on Swiss goods. But when it comes to market performance, aside from the trajectory of the euro, take a look at how European stocks have been faring. This is something that's really been led by the strength in the bank. So perhaps the geopolitics matter a little less against this backdrop. But Paul, some other top global headlines we're tracking as well.
Yeah, let's take a look at some of these other stories now. German Finance Minister Lars Klingbeil is heading to Asia. He's pushing for open, rules-based trade as tensions rise between the US, China and Europe. He'll take part in the German-Chinese financial dialogue in Beijing, meeting officials in Shanghai and Singapore as well, and press for fair competition along with better market access for German firms. Thailand says tariff talks with the United States will continue separately from its commitment to President Trump over the border dispute with Cambodia. Bangkok clarified the stance after Prime Minister Anutin spoke with Trump, who signaled that the US doesn't wish to interfere in the conflict. The US had paused trade talks pending Thai compliance with a peace deal. We'll have more ahead on the Asia trade. This is Bloomberg.
We have breaking data crossing the terminal from Singapore as it releases its October non-oil exports data, rising at 22.2% on year. This is much better than the estimated 7.5%, and indeed compared to the revised number for the prior reading of 7%. So maybe pointing to that sign of resilience in Singapore's exports. Electronics exports rising 33.2%. 1%, also a faster pace than the prior reading. But of course, we also have a lot of other data that is on the calendar this week, Paul.
Yeah, let's take a look at some of that, starting today with Japan's industrial production numbers and GDP numbers as well. We've already received those. It was a slight beat, even though the economy contracted 1.8%. That was the first contraction we've seen in 6 quarters. Looking ahead to Wednesday, the Fed's going to release minutes from its October meeting, shedding light on an unusual split among policymakers. This is after the FOMC cut rates by a quarter point at its previous meeting. Also on Thursday, the BLS says it's going to release the September jobs report, finally, after that was delayed due to the government shutdown. The Bloomberg New Economy Forum, meanwhile, begins in Singapore on Wednesday. The theme this year, appropriately, thriving in an age of extremes. All right, let's take a look at how markets in Asia are tracking. Quite a few interesting idiosyncratic stories going on. If we take a look at the Nikkei, it's turned negative, off 0.4% at the moment. We're seeing tourism and travel-related stocks getting beaten up in Japan. This is after China advised its citizens to avoid trips to Japan. And this is after the Japanese Prime Minister Takaichi said any sign of Chinese force in Taiwan would be, quote, a survival-threatening situation. That did not go down well in Beijing. Seeing some optimism around the Kospi, however, better by 1.5%. Here in Australia, meanwhile, the index off by 0.2%, really being dragged down by BHP, which is one of the giants of the index. And this is after a London judge ruled that BHP is liable to compensate victims of that 2015 dam collapse in Brazil. 620,000 Brazilians seeking compensation of more than $47 billion. BHP says it plans to appeal that ruling. Avril.
Paul, we're also counting down to the start of China trade, and Alibaba's Hong Kong listed shares will be in focus after its ADRs fell on a report of ties to the Chinese military. The Financial Times says the company provides tech support for PLA operations against targets in the U.S. For more, our Asia tech correspondent Annabelle Drollers joins us. So, Belle, we've already seen Alibaba pushing back strongly on this report, but what are the details?
Yeah, it's really quite an inflammatory one, I guess you could say. So no surprise, really, we got that reaction from Alibaba already on Friday. But this is a report that came out from the Financial Times, and what they're looking at is an official memo that they say was supplied to the FT via the White House. And in that memo, it includes declassified so-called top-secret intelligence on how exactly Alibaba supplies the PLA, or the People's Liberation Army, with capabilities that the Washington says undermine U.S. national security. So these claims, they do reflect some very much growing concerns around Chinese cloud services, in particular artificial intelligence, but as well Beijing's ability to access and exploit data that is sensitive in the US. You can see here that reaction we got in ADRs, for instance. It was a pretty big drop of around 4%. But according to the White House memo as well, because we got more details on this, Alibaba also provides the Chinese government and PLA with access to customer data. That includes IP addresses, any Wi-Fi information, payment records as well as different AI-related services. So, again, this is all according to the FT, but it did say employees from the company Alibaba had transferred so-called zero-day or knowledge of zero-day exploits to the US. That's essentially looking at previously unknown software vulnerabilities and how those can be exploited. Again, 0-1, because you're not giving developers any sort of chance to make fixes here. Alibaba, as you said, they rejected these claims very strongly. They're saying that essentially the sourcing on this one is complete nonsense. That's a quote from Alibaba. But also that this is something that is undermining the talks between the US and China and their recent trade decision or takeaways that they had at their most recent meeting.
Belle, meanwhile, the Wall Street Journal's reporting how US-China tensions are impacting Tesla. What can you tell us about that?
Yeah, so it's just another company that seems to be caught up between these geopolitical tensions, Washington and Beijing. But essentially what we're hearing now is Tesla is requiring that all of its suppliers exclude China-made components if the cars are being manufactured in the US. So this is a decision that the Wall Street Journal says happened earlier this year. Essentially, this does seem to be sort of continuing a train of progress that's been already underway, because we saw during the COVID era, for instance, the the issues essentially with having so much reliance on one sourcing part. But given you've got those tariffs now in play, we do understand that Tesla, or through Wall Street Journal, saying that Tesla's been sort of ramping up its shift into new markets. So Mexico, for instance, is becoming a new key supplier or key source country for components as well. But that is the latest on Tesla here. Again, that's according to Wall Street Journal reporting this one.
Bell, sticking with EVs, there are some key China names that will be reporting this week.
Yeah, that's right. So there's actually three key ones that are coming up. There's Xpeng, there's Geely. Both of those are later today. And then you've also got Xiaomi coming up on Tuesday. Now, all of these are actually supposed to be reporting fairly strong numbers because we have seen EV sales and distribution picking up quarter on quarter. So expected to top around 1.2 million deliveries in the final 3 months of this year. In terms of sort of the standout names, I mean, I think you really can't go past Xiaomi that's reporting on Tuesday. And that's also because, you know, this is a smartphone company. It was a smartphone company. It's made a very successful foray into EVs, though, and this is at a point now where we're actually starting to look when can the EV unit turn break even, but then also turn profitable. And you've got the likes of UOB, for instance, saying it could be possible even in this quarter. Others are saying maybe toward the end of the year. But certainly EVs are sort of picking up where we're starting to see smartphone sales falling a bit flat. But as I said, you've got Geely and also Xpeng coming up later today, and sales could be strong for Xpeng, for instance. You could be looking at quarterly revenue doubling. So you can see, I guess, you know, quite a strong share price performance this year as well.
All right, Annabelle Jewelers there. Well, once known primarily for its photography business, Fujifilm is expanding into biotechnology and semiconductors with major projects in India and other countries. Speaking exclusively to Bloomberg, CEO Teiichi Goto told us more about the company's new goals and the impact of tariffs.
Currently, the primary areas we're investing in are, first, contract manufacturing for the biopharmaceutical business, also known as CDMO. The other area is semiconductor materials. These two markets have exceptionally strong growth potential. For example, the CDMO business currently represents a $500 billion market size. While low molecular weight drugs are currently dominant, the market is expected to grow to the point where biopharmaceuticals will surpass them by 2028. As for the semiconductor market, it has been growing at an annual rate of around 8% or 9%. By 2030, it is projected to reach a scale of around $1 trillion. We are investing in both of these areas.
Looking at the broader Fujifilm business, what's been the impact so far, especially given that we're not just talking about levies, we're also talking about potentially costs going up when it comes to some of the materials that need to go into a lot of the components of the things that you make?
That's certainly true. The tariff issue was indeed a major problem for us initially, but now at an incredible speed, we've changed the supply chain. We ship from the country of origin that supports us. Then we also worked on cost reduction, cutting expenses, and lowering product costs. Additionally, we introduced new high-value added products. As a result, the impact of tariffs has been minimized, and its effect has largely disappeared. I was a bit concerned about our consumer products, like the mirrorless digital cameras, the Instax line popular with younger people. I was worried that consumer sentiment might be dipping a bit. And also, given the situation in the U.S. economy, now we're nearing Black Friday and the peak Christmas shopping season. Looking at the current state of distribution and purchasing, it seems things are still going strong, so I'm feeling a bit relieved. Therefore, regarding this fiscal year's performance, specifically in the imaging division for digital cameras and Instax, we have revised our forecast upward by 20 billion yen.
Fujifilm CEO Teiichi Goto speaking to Bloomberg Charian in Tokyo. We have more ahead on the Asia trade. This is Bloomberg. Turning now to Chile, where presidential elections have closed, candidates from either end of extreme political ideologies, Jose Antonio Kast and Jeanette Jara, are on track to advance to runoff elections. Let's cross to Santiago, and our Latin America executive editor, Creighton Harrison, joins us. Creighton, so this runoff, more or less expected. What do we know so far about how far right the country has swung?
Well, you always have to be careful talking about how far right or left the party has swung based on the president, because Chile does have a strong legislature, and they have a habit over the years of pulling whoever the president is a little closer to center, and that's certainly what we've seen with the current president, Gabriel Boric, who swept in the wave of support for the left 4 years ago. So this isn't necessarily mean that Chile starts a dramatic swing to the right, but we are seeing some things here that do sort of mirror what we've seen elsewhere in the world, elsewhere in Latin America, and certainly in the U.S., with voters embracing more hard right candidates, particularly candidates with an anti-immigrant message, candidates with a tough on crime message. These are things that have helped Jose Antonio Kast make it to the runoff, where he'll face the communist Jeanette Jara. Jara won in a primary. The right did not have a primary, but on the left they did, and she beat out the other candidates there. She's a very personable candidate. People seem to like her on a personal level, and that's how she sort of beat out the others in the mix. In the mix, who didn't maybe have the same connection with voters, but it was always going to be a tough road for somebody affiliated with the Communist Party to make it very far, and she has made quite an accomplishment by doing that. But now Kast definitely becomes the favorite, and she'll have an uphill battle to try to win in the runoff on December 14th.
So, Creighton, law and order, immigration, both very prominent issues on the ballot. But what can you tell us about the economic policies of these two candidates, and what happened to Chile's stellar run of growth? Can that be restored?
Yeah, pretty much all the candidates across the spectrum talked about their recipe to restore growth. And as you would expect for a right-of-center candidate, Kast is very much about cutting bureaucracy, cutting government spending, cutting regulations, right? So, and some of those are things that have maybe been imposed by the current regime on the left. So maybe about undoing some things that have already been done. But the other big thing that comes up a lot in Chilean economics is commodities. And of course, it's a big copper producing area, a big exporter to China and the U.S. And so how you harness the power of the state-controlled copper producer and invite more investment in mining is always a key part of the equation. And of course, a more right-of-center candidate would be more open to foreign investment.
All right, Latin America executive editor Creighton Harrison there in Santiago. Well, Google's investment in the Indian state of Andra Pradesh is expected to grow beyond its initial $15 billion over 5 years as more global firms flock to India to build data centers. Chief Minister N. Chandrababu Naidu spoke with us about his state's tech ambitions, including in quantum computing.
The economy of India is matured, and funds are available all over the world. We need people to transform. Technologies are matured. I have seen IT. To promote IT, I started iTech City. That is late 90s story. Today you are seeing AI, data center, and quantum computers. Leapfrog development. And also, Government of India wanted to go in a big way, technology breakthroughs. Government of India announced quantum machine. I took an advantage. First quantum computer is coming to Amravati. After that, I called people. What is our next goal? Within 2 years, we are going to produce quantum computers. There we are going to export it. Now we are focusing on green energy. Today in Visakhapatnam and Andhra Pradesh, it is going to become global hub for data centers. How it happened? It is an ecosystem. If you create something, automatically something will come. Because of our tariff, cost-effective power, and also green energy, people are coming to India to set up data centers.
Google has announced a $15 billion investment. You expect them to do even more, maybe double that?
It is a win-win situation. To start with, $15 billion US within 5 years' time. Then we are having human resources also to work AI. Now we are very strong in information technology. Now we are changing our gear for AI. Tomorrow we are going to change again quantum computers. This is where everybody is saying America is having Silicon Valley. We are having Quantum Valley.
Quantum Valley.
We want to speed it up, everything quantum speed, thinking process, everything. Tomorrow, if you can imagine quantum computing, personal medicine, agriculture at micro level, decision at micro level, communication at micro level. Tomorrow, all offices will become, corporate offices will become redundant. Reason is data center will compute everything, keep everything, communicate everything.
You're building a new city from the ground up, Amaravati. How soon can we expect that to be functional?
Amaravati is a greenfield city. It is a wonderful project. Hyderabad was brownfield city. 2 cities, I added 1 more city. Today, best livable city is Hyderabad. Highest per capita income is Telangana. You name that outer ring road, any city is having, you can go through now. No other city is having. Greenery, IT, pharma, insurance, biotechnology, airport, widening of roads, everything we had done. Today here, this is greenfield city. I want to go to next level.
The Chief Minister of Andra Pradesh speaking with Bloomberg's Daniel Tenkate. We have more ahead on the Asia trade. This is Bloomberg. And we have some breaking news crossing the terminal, of course, following on from the reopening of the U.S. government. The things to watch included the resumption of flights, as neither side, of course, wanted to be blamed for some of these flight disruptions into the busy holiday period. We're since hearing how the U.S. will resume normal flight operations on Monday and that the emergency order will be terminated at 6 a.m. U.S. time. Of course, this is following on from the reopening of the U.S. government. So flight operations set to resume in the U.S. Paul?
Well, let's get to some of the top corporate stories that we're tracking. The McKinsey review has reportedly criticised ANZ's culture, saying staff avoided delivering bad news. The AFR says the review also found that former CEO Shane Elliott did not sufficiently focus on customers and non-financial risk. ANZ hired the consulting firm to conduct a wide-ranging review after Australia's banking regulator found shortcomings and imposed higher capital requirements. Boeing says it will focus on stabilising 737 production at 42 planes a month before increasing output again next year. The company is still recovering from years of setbacks and working towards certification of the smallest and largest 737 variants. Boeing says getting it right at pace is better than going fast as it ramps up both the 737 and 787 lines. Avril.
Yeah, even as we look at some of these aviation names, take a look at the travel, tourism-related stocks in Japan that are on the move today, pairing some of those double-digit declines earlier, the likes of Shiseido down about 9+% now, but against the backdrop, of course, of this diplomatic spat that has flared up again between China and Japan, with Beijing advising citizens to avoid trips to Japan over its comments related to Taiwan. We are watching for, of course, whether this Tokyo response comes in. We're watching out for the reaction from Japan and whether there is a further ramping up of the tensions between the two sides. Those are among the stocks to watch in Japan, but also we're seeing on the other side of the coin, it's worth noting these Japanese banks that are powering through, following on from good guidance from earnings last Friday. Paul?
Let's take a look at how Tesla suppliers are tracking as well. The EV maker, one of those mini companies that's caught in the crosshairs of US-China trade tension. So Tesla is saying it's going to require its suppliers to avoid made-in-China parts for US cars. It's now going to require its suppliers to exclude those components just for manufacture of the cars in the United States. So it's been trying to reduce its dependence on Chinese-made components for some time. But since President Trump imposed those stiff tariffs on Chinese imports, the company is understood to have started to accelerate that strategy of cutting out the Chinese parts. We've had no official comment from Tesla. Avril.
Watching crypto shares as well, Paul, as we see the largest digital currency, Bitcoin, erasing its more than 30% gain that it registered since the start of the year. There's a lot of that exuberance that's been taken out of the markets. And of course, this is coming just a month or so after it reached all-time high. So among these crypto shares that you're watching include Metaplanet that are down 7%, Paul.
All right, let's take a look at how we are tracking ahead of the open in China and Hong Kong as well. We've got Taiwan futures currently higher by about 1%, anticipating a little bit of softness in Hong Kong and China. That is it from the Asia trade. Markets coverage continues in a moment.